All right, let's talk about something that can feel a little complicated. When you hear the words accounting or finance, I'm going to guess your eyes might just glaze over a little bit. It sounds like something for experts, right? But what if I told you the basic building blocks of finance are things you deal with every single day?
Look, it's a totally normal feeling, this idea that you need some fancy degree to really get a handle on your own money, but that's just not true. These core principles, they apply to absolutely everyone, whether you're a student grabbing shifts at a coffee shop or a family trying to figure out the household budget.
And that's really the big idea we're going to unpack here. Think of the 5 basic elements of finance like learning an alphabet. Seriously, once you know the letters, you can start putting them together to write your own financial story. So, you ready? Let's learn that alphabet.
We're going to start with the first 2 letters of our financial alphabet. These are the absolute fundamentals. They're total opposites, but they work hand in hand to show you exactly where you stand, financially speaking. It all comes down to what you have versus what you owe.
So, on one side, you've got your assets. This is all the stuff you own that has value. On the other side, you've got liabilities. These are your debts, your obligations to other people or companies. It's the essential push and pull of your financial world.
Let's get a little more specific about assets. We're talking about things like the cash in your savings account, your car, maybe even your house. But an asset can also be something that helps you make more money. For a student, that laptop isn't just for watching videos. It's a tool that helps them study, maybe do some freelance work, and actually generate income. Assets give you a foundation and open up doors.
Okay, now for liabilities. This is the other side of the coin, the money you owe. Things like a mortgage, a student loan, that lingering credit card balance. Now, it's super easy to just label all debt as bad, but it's not that simple. A student loan can get you an education that boosts your earning power for the rest of your life. A mortgage gets you a home. The real question isn't if you have liabilities, it's whether or not you can handle them. And this is where it all becomes crystal clear. Just look at these 2 examples. If you're making $2,000 a month, a $5,000 loan is probably pretty manageable. But if you're only bringing in $1,500 a month, a $20,000 loan, that's a whole different story. It's not just about how much you owe. It's about how much you owe compared to how much you make. Which brings us to this really important point. Debt is a tool. If you use it wisely, it can help you build your assets and grow your wealth. But as we just saw, if you're not careful, it can completely sink your financial ship. It's a powerful tool, and you've got to treat it with respect.
All right, on to the next 2 letters in our alphabet. If assets and liabilities are like the nouns of your financial story, the things, then income and expenses are the verbs. They're all about action and movement, the flow of money in and out of your life.
Think of it like a current. You've got income, which is the money flowing in, and you've got expenses, the money flowing out. And honestly, learning how to manage the relationship between these two is the secret to getting ahead.
Now, your income is usually your salary from your job, but it could also be money you make from a side hustle or your own business. But here's a huge trap people fall into. Thinking a bigger income automatically means you're better off. Someone who makes $10,000 a month but spends $9,500 is in way more trouble than someone who makes $3,000 but only spends $2,000. It's not what you make, it's what you keep.
And that leads us right to expenses. Of course, we all have to pay for necessities like rent and groceries. But where you really have control, where your financial power lies, is in managing all those optional expenses. The daily coffee runs, the subscriptions you forgot you had. That's where money has a habit of just vanishing. Let's make this super real. Say you spend about $200 a month eating out. Doesn't sound too crazy, right? A lot of us do that. It's just a few meals here and there. But what's the real cost of that habit over the long run?
Well, over 10 years, that $200 a month turns into $24,000. Wow, that's a down payment on a house. That's a business you could start. That's the real power of getting a handle on your expenses. It frees up serious cash that you can then use to build your assets. So we have our first 4 letters: assets, liabilities, income, and expenses. Now it's time to put them all together to form the single most important word in personal finance, the one that gives you the true, unfiltered story of where you stand.
And that word is net worth, or equity. This is the real score. It's not about how much money you make. It's about how much you own, free and clear after all your debts are paid off. This number is the bottom line, the ultimate measure of your financial health. And you know what the best part is? The math is incredibly simple. You just take everything you own, your assets, and you subtract everything you owe, your liabilities.
And whatever's left over, that's your equity. That's the number you want to see go up over time. Let's use a quick example to hammer this home. Imagine you've got a house that's worth $100,000. That's your asset. You still owe $60,000 on the mortgage. That's your liability. So your equity, the part you actually own, is $40,000. See? Simple. Okay, so now we have the whole alphabet: assets, liabilities, income, expenses, and equity. Now we can see how every single money decision you make isn't happening in a vacuum. It's all connected. Let's see how. Think about something common, like buying a car with a loan. First, you decide to do it. Instantly, your assets go up. Hey, new car! But at the exact same time, your liabilities also go up because you now have a car loan. And the result of those two things happening at once, your overall equity, your net worth, takes a hit. Every choice creates a ripple effect across your entire financial life.
So you see, these 5 things aren't just boring accounting terms. They're the literal building blocks of your financial future. When you increase your assets, manage your liabilities, grow your income, and control your expenses, you are actively building your equity. You're building financial freedom. You now have the alphabet. So the only question is, what story are you going to write?